Well, g'day there, traders and friends, market participants and enthusiasts right around the world. Thanks a lot for joining me as at this Monday afternoon market recap. There is about 15 minutes left in today's session. However, I think the daily candlesticks have more or less suggested exactly what they are going to do as we move towards the close of Monday's session. What we are left with really collectively across the board, especially on the industrial average, is that of a little doji candlestick, almost that of a shooting star. You can see that we do have that of an upper wick. However, the upper wick is really showing up at the sideways moving exponential moving average. So it's very natural and common for, I guess, markets and also individual stocks to set up these little wicks up and around what appear to be that of resistance areas. Now, the problem with this, if you are just looking at the exponentials, is that during a sideways market move, they don't really act as decent resistance and also support. When you find yourself moving sideways, i.e. when you find yourself in a trendless sort of market, that is exactly where we find ourselves in at the moment. Your best bet is to actually check with those oscillating indicators. So instead of paying attention to, look, potentially there might be resistance at this sideways moving 50 exponential moving average, what you're best to do is, again, bring up and have a look at the stochastics, the RSI, and the MACD. And they haven't really shifted all that much during today's session. Stochastics still largely sideways. The same with the RSI, and the MACD really hasn't budged all that much. So it looks as though today's session is going to be rather inconsequential, so to speak. It has been a rather sort of dull session, but at the same time, we are starting to see a little bit of activity in our top 12 individual trade list. The same is true for the S&P 500. Again, this is not the final print as at Monday. We still have maybe 15 minutes left now, but you can see we're closing up so far 7.5 points. We still have that of a very short term and very small doji candlestick as well, or a little spinning top. All right, again, if I can bring up the sideways moving exponential moving averages, it doesn't really come as a surprise that we're starting to see this type of candlestick construction, especially around this sideways moving 50 exponential moving average. But again, when I begin to bring up that of the oscillators, the Stokes is pretty much at the 50 point, the neutral line. It's actually looking to turn up from the midpoint line. So it's going to be interesting if we can get any significant push above the highs of today's candlesticks with the market indices themselves. The RSI is still pretty much smack bang right in the middle. It's registering at about 54, 55, and the MACD is absolutely flat going sideways. This leads me to believe also that we could be setting up that of a Bollinger Band squeeze. Now, if you look at these markets, you can sort of suggest that depending on the market that you're looking at, you could be sort of simply looking at a symmetrical triangle, even potentially that of a descending triangle as well. That is rather inconsequential as well. The reason for that is because when you get these Bollinger Band squeezes, really you want to keep as neutral as possible. Now, I've spoken about this over the weekend and also for a number of weeks. And generally what happens is when you get into Bollinger Band squeezes, especially on market indices, they generally play out in the direction of the prevailing trend. And I just want to clear this up as best I can. The trend itself, okay, if you go out onto the macro time frame, we are still very much clearly in an up market. However, when we look at the high that we registered in January, it does look as though we are in still that of a corrective phase. This is not the trend. The trend itself is not down. This is due to, of course, the reset that we had towards the end of January as we saw these oscillators really move up into territory that we really hadn't seen before. We saw these extremely overbought oscillators in and of themselves. And again, we were ushering in, or at least paying attention and potentially trading also the pullback, or at least the reset, which is what has sort of got us into this correctional type of trading range where simply we're just really stagnant and moving sideways, allowing both the buyers and sellers to shake each other out, to reset the market, and then to bounce ultimately off from this support. I still believe this is to be true. And again, if I could bring up those Bollinger Band squeezes, or at least what appears to be a Bollinger Band squeeze, if we continue to more or less move sideways, this is really going to begin to constrict price action. And then essentially this trigger is going to be, the volatility sort of breakout to the upside, or we could very easily sort of register another bearish trade below this area down towards 2,550 on the S&P 500 as well. Now, again, going into a couple of stocks, Apple triggered to the upside today. We had a fairly lengthy discussion about this. It was really, do you want to miss, the potential breakout, or do you want to leg into it with sort of a smaller bunch of positions to begin with, and then of course begin to pyramid into the trade over time? Now, it looks as though, again, much like the markets, we're having that of a spinning top, very close to that of a shooting star as well. 184.75 was the continuation entry. what you need to pay attention to are these rising exponential moving averages. So unlike the market, Apple is still technically trending, which is good to see. You can see price action is above its most recent resistance. We are registering at new all-time highs once again, and this exponentials are crossing to the upside. So this is technically a buy signal. If I couple this also with the ADX is registering the breakout, and the CCI is hitting firmly above 100. So this is telling us that this trend breakout looks to be true. But at the same time, given of course the candlesticks that I've just set up on the market, not to mention that on Apple, you could see a little bit of a pullback. And that's exactly what we spoke about over the weekend. Now, continuing on, we've got Amazon trying to push to the upside, up just over $13 today. It's going to be interesting to see whether or not we can breach this resistance area this week. We have Boeing Airlines pushing above 336, which is pretty decent at the moment. It was looking very, very nice today. It was up very close to 345. It has pulled back a little bit, but at the same time, it appears as though the support area is holding, and we are basing, much like the market's pushing off from the respective support areas. Baidu did not trigger at 258.59. If we see any more sort of bullish advancement on the indices, we should see Baidu trigger. Most likely this week, we've got Caterpillar breaking above 148.07. It's trading just shy of $150 per share. Again, intra-session today, it pushed very close to 152, so a nice little move there. ConocoPhillips has got that of a shooting star, very similar to that of Apple, pardon me. So again, you can see that we're getting very close to breaking out. We have more or less broken out. We have to pay attention to this. Please just stop below the low of Thursday's candlestick and hold on to this one. It should work out pretty decently. We've got CVX. You can see the dashed dotted line as to why we wouldn't do it. 128 was that potential breakout. However, we didn't place this one. It was a dashed line. You can see why we have this upper wick. And really the reason for doing so is just because of the relatively poor risk and reward ratios. That was the main reason why we didn't take CVX. Google is also pushing off from its support area. We've spoken about this for a number of weeks, holding the support, turning, and beginning to rally. Now, we started to see that on Friday as the markets really pushed off from their support. We're seeing a little bit of a follow-through candlestick today. So you can see that the candlestick, or at least at the current juncture, with maybe 10 minutes to go now. I don't know how long I've been speaking for, but you can see it isn't really that of a spinning top candle, or at least certainly it's not that of a shooting star candlestick. So again, above 1,050, 155. Actually, I know a lot of people who position themselves closer down to 1,020 after this reversal candlestick on Thursday, much like the markets as well. So that's where the trade was to be placed, but this is looking like a really nice sort of continuation trade as well. We've got IBM, which appears to be basing down at this support area. I don't think it's going to overshoot that to the downside. It is going to be a process that is going to take a little bit of time. We also have Netflix, which is very similar to actually Amazon at the moment, and it is continuing to hold off from these rising exponential moving averages. We got a little bounce today up very close to, or at least just over $5 as at this recording. The test of truth is going to be these two peaks over here. So if we can really push above them, and if you see Amazon breaking out, and if you see Apple continue to hold at least around this sort of respective area here, just around 186, 185, and then that's going to be a fantastic trade as well. And to conclude with, we have Tesla, which really we're not looking to trade at the moment. It has come back into this sort of range bound sort of perimeter between 280 and also 310. We're stuck pretty much right in the middle. But we'll see what happens if we can sort of move into a squeeze potentially, or if we really get some definitive signals up and around one of these two support or resistance areas, well then that will become a decent trade as well. Just to recap, also gold. Gold's got another little inside candlestick. This is very close to that of Harami, who do have a little upper wick, which did move outside that of Friday's candlestick last week. I still think gold is going to come on down a little bit lower. I think it's going to head towards 123 or even 122. So although we have the insurance policy to take the breakout if it chooses to actually occur, I still believe we are going to come on down a little bit lower, and that's going to work in conjunction with, of course, the US dollar reversing. I'm not going to speak about the US dollar, really an active day today, but SLV again more or less holding up just above the support area at $15.30 as well. So that's going to do us for this Monday as at the market recap. If you have any questions, please email me, success@pivotpoint-trading.com. I wish you all a very nice Monday evening. I'll be back with you again later in the week for some more market addresses, and hopefully we'll have some more definitive price movement, which is going to really confirm to us the direction of the market, and also some more updates on our top 12 individual trades if more continue to break out or develop, and also trade management too. So on that note, everybody, I'm going to say farewell. It's James signing off on behalf of Pivot Point Trading. All the best, everyone. Goodbye.